Okay, so we'll look at the 2017 mock um, Fin Health Centre. I'm not. I haven't done this, so we'll see how it goes. I don't know if there's anything too exciting in it that we maybe hasn't popped up before, but we'll give it a go. So as usual, that's the first thing. Underline the number of years depreciation. Get that in so as we don't make a mess of that. So it's 3 years depreciation. So statement of capital first. So your assets and liabilities. The following are included in the assets and liabilities of FinHealth. Buildings and grounds first. 630. 3 years depreciation. So 3 years by 2%. So 2% of 630 by 3 is minus 37.8, giving you a value of 592. Then we've got our equipment of 60,000. 3 years depreciation at 10%, which would be 6,000 a year, so that'd be 18,000. So that's 42,000 for your value there. And then you've got your vehicles. Vehicles cost 80,000. 3 years depreciation, and the rate is 20%. So 20% is 16,000 a year. So 3 years of that is 48,000, giving you a value of 32,000. So there are your three fixed assets with the depreciation. The rest of them don't. So stock and shop can go in. That's 4,100. Stock of oil is an asset. 1,700. Creditors for supplies is a liability. So creditors for supplies is 3,400. 5% investment is an asset. And that's 70,000. So just be aware there's going to be investment income later on then to work out from that. Contract cleaning prepaid, so you've paid it in advance, so it's owed back to you, so that's an asset. $650. You've got your clients' deposits in advance, so you owe them the money back to your clients. 47. Authorized list will go in and issued is 575. Okay, so then we're just looking for any other ones at the first of the first. So you've got your bank balance at the first of the first, 13.8. So that's on the debit side, which makes it an asset. There's no reason why it couldn't be on the other side. I'm sure it has been in other questions. If it's on the credit side, it's a liability. Debit side, it's an asset. Then we'll have our loan. So repayment of the 70,000 loan on the 1st of the 5th together with 18 months interest. So that's the more modern, well, the older way. So the loan is 70,000. And we have to work out what the loan interest due is. So you paid the loan back on the 1st of the 5th. So with 18 months interest. So we'll just do that working. So the loan interest is the difference between the 70,000 and the 75.4, which is 5,400. That's 18 months worth of interest. Okay, we repaid the loan on the 1st of the 5th. So therefore the expense for this year is 4 months. Which means that we owed on the 1st of the 1st 14 months. So we have to split that 5,4 up. So we're going to divide it by 18 and multiply it by 14, which doesn't seem right. So how did that happen? Divide by 9, divided by the wrong number there, sorry. So that's 4,2. And then this is 1,2. So the due on the first of the first, 4,200. That's everything that can go in. Okay, so there's nothing really from the bottom. We just have a quick check. There's nothing from the first of the first. That's all the information at the end of the year. So it's not like what a club account where you'd be looking for extra things. So we can total them. Hopefully I've done this right. Won't know until the end. So 7,564.50 and 6,57300. So take them away from each other, and that's your capital on the first of the first, or reserves on the first of the first. Sorry. Now, just while I'm here, I'm going to put this expense for the year, the 1,200, into my expenditure in my income and expenditure. That's why I rule out everything before we start, just basically so I don't forget that loan interest. And it was 1,200 euros. Okay, anyway, that's part A done. Part B is calculate the profit for the shop. So we've our shop trading, which is ruled out. So we've got our sales. Now, in the other mock from 2017, there was debtors for the shop at the start of the year, which meant you would have to change sales. There's not in this one, but just be aware, you would have noticed it as you were putting them in at the top. Um, there's not in this case, as I said. So sales just goes in straight in 64.5. Your opening stock is from the top. Again, make sure you're ticking these off as you go. 4-1. Your purchases is from over here, 38.1. And again, check there's no creditors for the shop, which there isn't. Unless closing stock for the shop is 3.6. That gives you a 25.9. Okay. So your expenses then down here in number 4, all your expenses are listed out. So we've got wages, and it tells us wages and salaries include 26,000 for the secretary who also runs the shop, and 30% of that salary is for the shop. So 30% of the 26,000 is wages. Then we've got the rest of them, they're just laid out for us. 350 of the light and heat. 900 of the insurance. 400 of the telephone. And that's them all. So we take those away. And your shop profit is 16,450. And of course, remember to put your shop profit in your income. And I would then straight away take these here, wages, light and heat, insurance, telephone, and I'd write them into my expenditure. So wages was minus 7.8. Light and heat minus 350. Insurance minus 900. And telephone minus 400. Okay, and that's our trading profit and loss account for the shop done. So from that point now, we're going to do the income and expenditure and the balance sheet at the same time. And really the things to remember, well, after the depreciation, which we'll do in a minute, is that if it's due at last year or next year, you take it away. So at the start of the year, if something is due at the start of the year, it gets taken away, or if it's creditor or debtor at the start of the year, it gets taken away. Uh, if it's to do with this year, you add it on. So opening stocks, add on. If it's to do it next year, like closing stocks, you take away as well. It's to do it this year, as I said, you add on from the bottom. So just we'll keep those rules in mind. Um, so anyway, we'll do our depreciations in our buildings first. So buildings is 630. Now we know that buildings is an asset. Okay, so we're looking for any other mentions of buildings. So we'll see there's building 630 here. There'll be an extension 250. So buildings is up to 630 and 250, which is 880. There's no sale of building or anything like that. And then normally buildings are revalued. So down at the bottom, buildings are revalued to 950. So I'm just going to throw that 950 in here. We know when we revalue, there's no depreciation. So just 950 becomes our expense as well. It becomes our value. However, for our depreciation and our revaluation reserve, just get that in. So we know there's authorized and issued share capital. There's a revaluation reserve. So anytime you're revaluing buildings, you're going to have a revaluation reserve. So to do that, we'll find our depreciation charge for the year. So our depreciation is 2% of the 630 and the 250. So 2% of the 880. Which is 17,600. So that's your expense. So we can put that in. Now, anytime we've got depreciation, we'll have either accumulated depreciation or revaluation reserve. They're made up of the same things. So it's your depreciation up to this point, which you get from part A. So for the buildings, it's 37.8. Add on your depreciation charge for the year, and that will give you your accumulated depreciation. But because there's a revaluation from 880 up to 950, you have to add on the revaluation surplus of 70,000 as well. So that's 125,400. So that's our revaluation reserve, the 125,400. Okay, second one then is the equipment. So let's look at equipment. 60,000. We didn't sell any. Always check to see if you sold something. Often they will. You've bought new equipment costing 18,000. And we go down and see at the bottom, it's just 10% for a full year. So it's 10% of the equipment is just 60,000 plus the new equipment of 18, so 78, which would be 7,800. So that's your expense. Um, 7,8, and then your accumulated depreciation will be the 7,8 plus the depreciation from here, the 18,000. So your starting depreciation from part A up to that point, add on the 7,8, that'll give you 25,800. Obviously, I'll get them into my balance sheet now. So The only real mistake you can make sometimes with this is forgetting that it's accumulated depreciation in the balance sheet. I've seen quite a few you do that in the past. Vehicles then is our last one. In the last few years, there's been like a question one sort of working to vehicles, so we'll just take our time with it. So with vehicles at 80,000, check that you haven't sold any. You bought a new vehicle costing 40,000 here. So 80 plus 40 suggests it's up to 120, but you'll find it was probably a trade-in or something. Yeah. So this is what we're looking at here for the depreciation. It says vehicles 20% of cost per annum from date of purchase to the date of sale. Okay, so I know there's going to be 20% of something and 20% of something, because once it mentions date of purchase to date of sale, there's some sort of a trade taking place. So on the 1st of the 9th, 2016, a vehicle which cost 30,000 was traded in against a new vehicle costing 45,000, and allowance of 5,000 was given on the old vehicle. So we're working across 2 days, the 1st of the 9th. So what do we have up till the 1st of the 9th? Well, we had the vehicles as they are here. It's 80,000. So that is for 1st of the 9th, so that's for 8 months. Now, after that, a vehicle which cost 30 was traded in against a new vehicle costing 45. It's going to be, actually, I'll just do it here. Vehicles. I should have done this first, really, but vehicles at the end of the year were, they started off at 80,000 minus the old one, which cost 30, plus the new one costing 45 is 95,000. So that's what vehicles will be in the balance sheet. I'll just put that in there. That cost. All right, so it's 20% of 80,000 by 8/12, and then 20% of 95,000 by 4/12. So we'll add those two together, and your depreciation charge for the year is 17,000. Okay, so we'll get that in as our expense. Okay, so our accumulated depreciation then. So anytime we've depreciation, we've accumulated depreciation. So our accumulated depreciation started off, same process. So it started off as 48,000. We're going to add on the charge for the year of 17,000, and then we're going to take away the depreciation on the van we sold. So it's from date of purchase to the date of sale. So it's 20% of 30,000, it's the one we sold, and we're multiplying that by the number of months we had it for. So we had it for all of 13, we had it for all of 14, and all of 15. So it's 3 years, 36. Then we had it for 8 months in 2016. So 36 and 8 is 44. Which is 22,000. So your accumulated depreciation is 43,000 for our balance sheet. So that is no different than a question one. And of course, what always comes next, so that's 52,000. What always comes next after your accumulated depreciation is your profit or loss. So anytime you sell an asset, you have to make a profit or loss. So the value of the thing, the value of the vehicle you sold was 30,000 minus the 22 accumulated depreciation. So its value was 8,000. You got an allowance of 5,000. So you got 5,000 for something that was worth 8,000, which means you made a loss on the sale of 3,000, which is an expense. Okay, so that 3,000 is going into your expenditure. That means that this new vehicle of 40,000 is now dealt with as well. We should be ticking that off as we go as well. So there's 3,000 into your expenses. And that's us done. Okay, so it's just an important one to remember that there's a loss on the sale as well. Anytime you sell an asset, there's a profit or loss on the sale of it. Okay, so we've ticked off all our buildings, we've ticked off our equipment, our vehicles. Shop in stock is already done. You'll have ticked off this equipment, new extension, new vehicle as well. And the loan is done as well. So next one is the stock of heating oil. So we're looking for any other mentions of light and heat. So we've got our stock of heating oil. We've got our light and heat here. We've got our stock of oil at the end. There might be light and heat due as well. There is our electricity due. There is at the bottom. So always start with your main figures from the questions. These are just sort of keys to send you to look for something in the receipts and payments. So you've got your light and heat. These are all ruled out from a previous question. So if your light and heat of 4,900, you'll add your opening stock at the start of 1,700. It's always add opening stocks because it is to do with this year. Take away your closing stock because it's for next year. And then add on your due of 380. And that gives you your 6280 as your expense. Okay, so that doesn't seem right. Yeah, 6280 must be right. So 6280, there is 350 to take away. Which gives you 5930. Okay, so we can tick off all our light and heats in our stocks now. Creditors for supplies to the health centre 43 or 34. So that's money that's owed from last year. So it's last year's account. So you're taking away creditors at the start of the year. So we've got our purchases of supplies, which is what that ties in with. So 36.3. Add on your, or take away your creditors from the start of the year. So you're obviously going to pay them first. So take away your creditors of 3.4 for last year. If there's creditors at the end of the year, they owe us money, but but it is for this year, so we include those. So your that brings you to your 35,600 for your expense. So that's purchases of supplies. Now, the next one is 5% investments. It's really easy to forget to put the investments in, so just make sure you get your 5% investments in as your asset. It's really important. 5% of that is investment income. You don't have to go looking for anything. Anytime they give you the percentage is your investment income. So in our income, we've got investment income, and it's 5% of the 70,000. which is 3,500. This investment income here, 25, is used to work out our investment income due. So anytime we have investment income, we have to check for investment income due, which is 3,500 minus the 2,500 we've received, which means we're due to get 1,000. Okay, so that's our investment income due. Investments done. We can tick off our investment income here as well. We've used that. Contract cleaning prepaid 650. So again, checking for your contract cleaning, there'll pretty much always be one at the bottom. So you've got 4.6 here in your contract cleaning. You have a prepaid at the start of the year. So that means it is for this year. You paid it last year, but we're using it this year. And you also have a prepaid at the end of the year. So it's going to be 46,100. Sorry, that was only 40. Sorry, I put in an extra zero. So it's 4,700 for your expense. Client's deposits. So this is our sort of big one. It's not a big one, but it's the last sort of one we have to do. So our client's fees, 333,200. Add the prepaid at the start of the year. So there's a prepaid of 650 to add on. So paid last year, but to do it this year. You take away the prepaid for next year. Client's fees include 7,300 for 2017. We're doing the books for 2016. So we're going to take away that, it should have been 4.7. We're going to take away that 7.3. But there is a client's fees due. Fees due were 900, so we're going to add on that 900. So that gives client's fees of 331,500, which is our income. Where's my stuff gone? Sorry. It's not going to be too many more workings from here. Authorized share capital 700, issued 575. So we'll just throw that in. Okay, bank balance. That's first and first. That's been dealt with. Client's fees ticked off. Investment income ticked off. Shop receipt 64.6. That's ticked off. Balance at the end of the year 154,200. It's on the debit side, which means the payments are greater than the receipts. So that means it's an overdraft. So it's a current liability. Oh, sorry. In recent questions, that bank overdraft has had to change, but I'll leave it as it is for the time being, and I'll come back and see if it has to change once I get to the bottom. So we can take that off. Laundry, and always check the bottom to see if there's anything extra to do with them. Maybe read through beforehand and make a note of it. But there's nothing with laundry, so that 3,400 could go in. Telephone 2.6. Take away the 400. It's 2.2. Wages and salaries 86.3. Assuming there's nothing to do with wages and salaries, so that will give us to 78.5. And then we've got repayment of loan, so that's done. Equipment is done, new extension is done, new vehicles done, contract cleaning is done, light and heat is done. Insurance 8.7 minus 900. Which is 7.8. Purchases of the shop is done, purchases of supplies is done. So we've got everything in. We just have to get all our stuff from the bottom into our balance sheet. So all of these things here are going into our balance sheet with the exception of number 4. So the two closing stocks. So shop stock is 36 and heating oil 700. Cleaning prepaid is an asset. That money is owed back to us, or the service is owed to us, one or the other. So that's 550. Clients' fees prepaid, we owe the money back. So clients' fees for next year, 7.3 are a liability, but clients' fees due to us are an asset. So it's 900. All of that doesn't matter. Creditors for supplies 27. It's not that number 4 doesn't matter. It's just that that's just a movement working rather than actually anything that's going to affect our balance sheet. So we'll just skip it and move to number 5. So that 27 goes in. The depreciations were done and the revaluation is done. So that should be everything. Hopefully this works out. So we'll go back to our income and expenditure. Add those together and we get 351,450. We'll add these together. We get 184,730. And we're just going to take them away from each other to get our net profit. At that point, add on your reserves from the first to the first, which is the answer from over here, 99,150. And we'll just add those two together and we get 265,870. So sorry, it's not going to balance. That was wrong. So that should have been 64,6. Just trying to check that. So the shop profit is 16,550. Goddamn. Hopefully it balances now. I don't know if it's going to. All right, we'll add up the assets and then add on your investments onto those. Okay. Add up your current assets. And we'll take them away from each other. It's obviously a big minus here. You could say this company is over trading here big time. So 157. What have I left out there? I managed to leave out the electricity due, sorry. How much was that? 380. Just managed to skip that somehow. So we'll take those away from each other. That's 157,830, which you're going to have to take away from your assets because it's a minus. that'll give you 113 111 370. Add in your answer 351,550. So it's not 351,550. It is 265,970. That's your profit and loss balance. Add those together, and hopefully it balances. 966,370. No, it doesn't. Where have I gone wrong? Sorry, that's 950. There you go, 966,370. All right, so that's that done. A couple of mistakes as we went, but hopefully that's of some use to you.